So the next concept that we are going to look into is the source of fund and source of wealth review, right? So basically the source of fund and source of wealth review, this idea is one of the most important aspects of your AML and KYC due diligence procedures. So let's try to first look at the agenda of this concept. So what are all the things that we're going to discuss under this head, and then we can try to understand individually what these concepts are. So basically we are going to try to understand what is source of fund, source of wealth, and what is their importance or significance in relevance to the AML KYC procedures. And then we will individually look into the source of fund and source of wealth using case studies, and then try to understand the compliance and the regulatory aspects, and also look into the challenges and the best practices that the compliance officers would need to follow to ensure they keep in line with the compliance and regulatory requirements. And at the same time, we will also look into some of the verification methodologies that are in use across the financial institutions, right? So to start with, right, yes, let's try to understand what is source of fund and source of wealth. Now the concept of the basic idea of source of wealth and source of fund verification is the requirement from the regulators, is a requirement from the AML regulators across the globe. So basically the AML regulators like FATF and other regulators as well across the globe want all the financial institutions to validate or to verify the origin of customers' money that is involved either in the transaction or whatever may be the money that is involved when the customer is trying to have a relationship with a bank or to continue the existing relationship. Now in this process, the financial institutions should try to deeply understand what is the source of the money that is being involved, to check if the source is illegal or not, right? So that is to basically understand the authenticity of the funds that are associated with the customer, right? So there includes certain due diligence procedures which the bank would follow to validate this source of fund and source of wealth, and thereby by conducting these checks, right, the bank may try to understand the comprehensive financial behavior of the customer, and it will also help the banks and the financial institutions to detect any kind of an illegal activities or financial criminal motives of the customer, right? So let's try to individually understand first what is source of fund, right? Let's use a case study, right? Now you can see the individual, his name is Mr. Paul Smith. His profession, he is an ex-government service, right? His age is 60 years. He is retired, and after his retirement he received a fund of $20,000 as a retirement benefit, right? Now considering his age and his current status, we understand that Mr. Paul has an idea to invest this $20,000 into a financial institution, right, in some kind of an investment methodology, right, so that he wants to live a peaceful life for the rest of the time and with his wife, right? So he is looking for an investment. So the objective of Mr. Paul is very simple. He got $20,000 in his hand, and he wants to invest in some way so that he can live peacefully for the rest of his life, right? So Mr. Paul decides to go for a time deposit, right, which is a fixed deposit, right? So looking at his age, we can easily understand that at his age it is very important for him to secure his investment, secure his capital. So time deposit would be the best thing for him, right? Which would help him save his investment and also get a little money on his investment, which he can use for his rest of his life. So Mr. Paul approaches a bank, right, or to his existing relationship, to his whatever may be the bank that he is having the bank account with. He can approach the bank and he may try to book a time deposit, or he may try to open a fixed deposit account to deposit, right, that $20,000. Now when the customer initiates this transaction, right, when Mr. Paul initiates this transaction, the banks will not simply accept it, right? Considering the amount, you can see the amount is considerably high. $20,000 is a big amount, right? Now the banks will not simply agree the transaction or accept the transaction. The banks need to do certain kind of due diligence before they accept this transaction or accept these funds into their financial system. The first question that comes into the bank's mind is very simple. What is the source of this $20,000? So in simple terms, the banks will try to understand, where did Mr. Paul got this $20,000? Are these funds of legitimate origin, or did Paul acquire this money in illegal ways? Is something the bank wants to understand. That is what we call as validation of funds that are involved in a transaction. So here the transaction is going to be a simple time deposit. The amount is $20,000, and the bank at this moment of time wants to understand what is the source of money of this $20,000. So to verify this, to understand if they are legitimate funds or not, the bank would follow a certain procedure. In that process, the bank would request the customer some documentation, right, as an evidence to source. So basically the bank wants to look at the documents, right, understand the customer, right, so that they can understand what is the source of this $20,000. So in general, when the bank does this source of fund analysis, right, they basically request for these kind of relevant documentation, which could be bank statements, customers' previous bank statements or other bank statements, or financial records, historical financial records of the customer, to understand how this customer has generated the money. And the pay slips, right, or wage slips, we call them wage slips or pay slips, to look at once again if the customer's earnings are legitimate or not, and also maybe other legal documents as well, right? So the bank would request Mr. Paul to get any of these documents, right, to check the legitimacy of the funds. Apart from this documentation, sometimes to mitigate the risk that is associated with the customer, right, if the bank considers the transaction is too risky, or if the transaction or if the amount is not usual for this customer, the bank may also request the customer to provide a customer declaration. So how does this customer declaration look like? So a customer declaration is a simple declaration where the bank will request the customer to declare the source. If you can see this document, you can read this document, maybe pause this video and read this document, right? So this document is simply asking the customer what is the source of the money that is being involved in the transaction, right? You can see the boxes, different options here, right? Salary, business income, dividend, interest, gifts, pocket money, etc. So the customer would declare and sign. He would sign that the money, the source of the money that is involved in the transaction. right? So this is also a risk mitigation mechanism that the bank would use, right, to mitigate the risk if they think the risk is too high, right? Now that is something related to source of fund, customer declaration, right? So now, after looking at the documents or after taking the customer declaration, the bank once would confirm, okay, the funds, these $20,000 that is involved in this transaction is legitimate. So in this example, yes, Mr. Paul's $20,000 are retirement benefits. So once the bank happily does this validation and finally concludes that this is a genuine fund, the bank will allow the transaction, right? So the sources of money could be of various types, right? There could be multiple sources, right? Any individual, as an individual or as a customer or as a person may derive his money that is used in the transaction in a different ways. Someone could earn money in the business and they could try to invest that money. Someone could use their salary money, savings. Someone could sell their property, and whatever may be the proceeds or the money they get from the sale of property, they may use it in the transaction. Or inheritance. Inheritance is nothing but the money that is derived from their parents and grandparents, right? And it could be pensions, it could be loans, gifts, investment, gambling winnings, right? Or any other legal settlements, right? So this list could be the sources of your customer's source of fund, right? Now let's try to summarize what is source of fund. Basically, the source of fund is all about the money that is specifically used in the transaction. Now Mr. Paul might have several other assets as well. He might have a lot of gold, he might have a lot of other bank accounts, he might have a lot of cash at his home or other assets as well. So the bank is not concerned here. The bank is only concerned regarding that $20,000 which is being introduced by the customer into the financial system. So this is a moment in time analysis. So the bank is concerned only about that money, that $20,000, but not about any other assets that are associated with Mr. Paul, right? Now, and also while the bank does this source of fund analysis, it follows a risk-based approach. So what does that mean? So the banks do not conduct this source of fund analysis on every transaction or on every customer, right? So they follow a risk-based approach. So they specifically target, right, those transactions, right, where the risk is high, or those customers which are high-risk customers, which they consider as a high-risk customers. So considering the risk appetite of the bank, if the bank considers the customer is a high-risk customer, or if the transaction involved is of unusual, right, that is when the bank will do this source of fund analysis, but not on each and every transaction, right? Now let's try to understand what is unusual activity once we go through the compliance response, right? So what is compliance response? Now the bank is doing this analysis to find out if the funds involved in the transaction are genuine or not. Now if the bank finds out, if the bank concludes that the customer is doing some illegal activities, or if the funds are not genuine, the bank might take certain decisions. That is considered as compliance response. So what could the bank do? The bank could exit the relationship with the customer, right? Or the bank may decide not to onboard the customer. If the customer is a prospect or a new customer, the bank could take a decision that not to onboard this customer, considering it's too risky for the bank, right? And also the bank could raise a suspicious activity report. So in the process of transaction monitoring, right, if the bank understands, if the bank thinks that the transaction is unusual, if it is unusual, the compliance officer will do an analysis on will do a research on the transaction. And while doing this research, if the compliance officer finds out that this transaction or the money involved in the transaction is illegal, right, if he feels suspicious, right, if the evidence is suspicious, the compliance officer would raise a suspicious activity report. So if it is United States, the compliance officer would raise a suspicious activity report to the FinCEN, Financial Crime Enforcement Network, which is the financial intelligence unit of United States. So if it is UK, it is the suspicious transaction report, right? That is the compliance response that you would see if the money involved in the transaction is illegal, right? So that is about your source of fund. Now let's try to look at the source of wealth, and we will first go through a case study, right? So here we have Mr. James Carlton, age 42 years, the net worth, his fortune, his net worth is $40.1 billion, and he's a very rich person. He's an influential person in the society, right? Very powerful person, and he is starting a new company. He's planning to start a new company, and his objective is to raise finance. His objective is raise capital to set up his new business, right? So to set up his new business by raising finance or capital, he needs some banking services. He needs some investment banking services. So let's say he approaches a bank to avail some investment banking services, right? Now the bank will not simply onboard this customer. The bank will not consider, okay, this customer is a very influential customer, this customer is a very rich customer, okay fine, we are getting a lot of money, we are going to get a lot of business, right? No, that is not how the bank should react. So before onboarding this customer, the banks needs to do certain due diligence, considering the profile of this customer is of high risk in nature, right? So the first question, as part of their source of fund and source of wealth analysis, right, especially the source of wealth analysis, the bank would have a certain question in their mind. So what is the source of? So we have seen this individual is having a fortune of $40.1 billion. So what is the source of his wealth? How did this individual generated that wealth over the period of time? The bank wants to understand. The bank wants to understand how this guy got rich in all these years. What is the source of that money that he is having now? What is the source? How did he generated so much wealth? So the bank wants to understand in depth to see if the source is legitimate or not before onboarding their customer. So to understand that, to validate the source of wealth of Mr. Carlton, right, the bank would request again the documentation, right? So the compliance officer should go through the documentation, do the research, work with the data, and then try to understand if the source of wealth of this individual is genuine or not. So what could be the documentation? It could be business related information. If this individual is holding certain businesses, if he is holding business ownership, the bank would need to analyze those documentation. And the bank may also look into other assets, other documents related to customers' assets like real estate holdings or any other holdings. or any other investments or inheritance related documentation, right? So basically the banks will use these documents to understand how this individual has acquired this wealth over a period of time. So for example, just take a celebrity, right? Take any celebrity. What is the source of wealth for a celebrity in general? So one, it could be working in the movies. They'll be getting a huge amount of remuneration. So since they are working in movies, the remuneration is the source of their wealth, right? Now ads, so they also work in the ads, right? Advertisements. So that is also one of the sources of their wealth. Or inheritance, right? Maybe his father, mother could be very rich persons, or his grandfather. So that money must have been transferred to this individual, right? Yeah, so that is what the bank will try to understand, how this individual generated so much wealth over a period of time. So even in this source of wealth analysis, the banks might require a declaration from the customers. So that declaration is called source of wealth certificate. So basically the source of wealth certificate is a customer declaration. So the source of wealth certificate requires the customer to declare all his assets. For example, Mr. James Carlton may have different kinds of assets like gold, right? Real estate, shares, right? So the customer should declare these assets, whatever assets he have, and what is the source. So how did he, what is the source of this particular asset? And then he has to get it certified using a chartered accountant. And he has to submit. That is called the source of wealth certificate. Now here you can see in the declaration, right? On the left hand side you can see the inheritance, business profits. So for example, if the source of wealth is inheritance, so these are the requirements. So who is, from where did the person got this money from, right? And any certain legal documents that are associated, which could be, when it is inheritance, the most important legal document would be a trust deed or a notary will. Or if it is business profits, the bank would scrutiny, or the bank would do an analysis on the financial statements or annual accounts of the business, right? Yeah. So now let's look at an example of source of wealth declaration for a bank, which will help you understand more about how we do this validation of source of wealth. Okay, so this is a sample source of wealth declaration that I have downloaded online for this Madhura and Kullis Bank. So this is how the declaration looks like. So basically it contains the details of the customer, right? So the customer is basically supposed to fill this document, right? Update all the details of their specific assets and also the asset value and also the source or the origin from which they have acquired. So the customer would be able to tick any of the assets, whatever may be the origin details against those assets. So basically the bank provides this document to the customer where the customer is required to declare all the assets, fill this form, sign it, and when required they may also need to get it certified by a professional who could be a chartered accountant and submit it back to the bank. So basically this is how the source of wealth declaration looks like. Right. So that is about your source of wealth. So in short, your source of wealth is not a moment in time analysis, right? Your source of wealth analysis is to validate the entire net worth of your customer, just to understand how this customer has acquired so much wealth over this number of years. And this source of wealth analysis is not done on every customer. The banks will only perform source of wealth analysis on high risk customers, rich people, politically exposed persons, high net worth individuals, celebrities, only on those individuals who have the ability to influence people and systems around them, right, on high risk customers. So this is also the source of wealth analysis is also part of enhanced due diligence procedures, EDD procedures, right? So yes, so that is about your source of wealth. Now let's look at the source of fund and source of wealth differences, right? Very simple. When it comes to source of fund, the origin of the funds, the financial institution wants to understand the origin of the funds. And in source of wealth, the banks will try to understand the origin of the total fortune of the customer, right? And in source of wealth, the banks are concerned about how and from where the customer obtained the money that is used in that specific transaction. But in source of wealth, the banks will do an analysis on how the wealth of the customer has been originated over the period of time, right? So to do this analysis in source of funds, the banks would require to understand the financial history and the current financial situation of the customer. And in source of wealth analysis, the banks will try to understand how this customer has acquired the wealth over the past by looking at the documentation. So examples for source of fund may be personal savings, pension releases, share sales, dividends, etc., etc. And when it comes to source of wealth, it could be investments, it could be business profits, it could be income for employment, right? Sale of immovable or movable properties, inheritance, etc. and etc. right? So in your interviews, they might ask you, this is the common question that you find in your interviews. What is the difference between source of fund and source of wealth, right? So you can easily use 2 to 3 genuine points to differentiate between the source of fund and source of wealth. Now, what is the relationship between the source of fund and source of? We clearly understand the differences between source of fund and source of wealth. Source of fund is a moment in time analysis. Source of wealth is an overall understanding of customers' wealth generation, right? But what is their common relationship? What is the link between this source of fund and source of wealth? When the bank tries to do this, both source of fund and source of wealth analysis, by doing both these things, right, by researching, by conducting a research on both the source of fund and source of wealth analysis, the banks could simply easily understand the comprehensive financial picture or the financial background of the customer, right? So the banks can clearly get a clarity on the authenticity of the money that is involved or that is associated with the customer, right? By parallelly doing this analysis, they can also detect any inconsistencies. They can detect any warning signs or any red flags that are associated, right? So sometimes these transactions or these customers are might do some transactions which are very complicated, where there could be a hidden agenda. The customer might sometimes try to hide the assets, hide the source of their incomes, right? So when you keep both these analysis side by side, it will help the banks or the financial institutions, right, to pinpointly understand if there is any hidden agenda, if there are any hidden assets involved in the transactions. And finally, yes, the banks, once they detect, it will make it easy for the banks to mitigate the risk that is associated with these customers. And the next is the regulatory and compliance, regulations and the compliance. Yes, so when we talk about source of fund and source of wealth, is it compulsory for the banks to do this? Yes, of course, it is regulatory requirement, right? The regulators across the globe want the banks and financial institutions to apply due diligence procedures against around the verification of source of fund and source of wealth. It is important and very important for the banks to comply with this regulations, especially the FATF regulations, right? So it's part of the compliance measure to identify, assess and verify the source of fund and source of wealth, right, in line with the risk-based procedures. This is not something, right, that the regulators want the banks to do on each and every customer. The regulators wants the banks to follow a risk-based approach. Observe the client's profile, understand the client's behavior, look if there are any unusual activities, do the monitoring, right, and then verify the source of fund or source of wealth in line with the risk of their customers, and accordingly the banks can choose to mitigate the risk, right? And finally, the most important, yes, the challenges and the best practices that are associated with this, source of fund and source of wealth. Yes. So the first is your complex nature of financial transactions. So at times, often the transactions that are associated, are very complicated. It is very difficult and it is time consuming for the compliance officers to take a decision, right? So in most scenarios, right, especially when it comes to the global banks, right, analyzing data analysis, right? So we have seen in the verification process, the banks have requested a lot of documentation from the customer, right? So the compliance officer would need those skills, research and analysis skills. So the compliance officer should go through the data and use appropriate technology and tools, right, to understand the transactions, right? And the other thing is anonymous, volumes of data, the huge volumes of data, right? You have thousands and thousands of customers. There's a lot of data that the compliance officers should work from, should work with. So there is so much data that it is very much impossible for the compliance officer to work manually, right? So again, yes, they may use some technology like automation and artificial intelligence to deal with this data, right? So and it is very much obvious that the manual errors could occur when you are working. We are all human beings. Yes, when you are working, yes, the manual errors, the operational risk is of paramount importance here, right? Which is why you have your technology in place. So most of the global banks, right, very large private banks in these institutions have already adopted a lot of technology and artificial intelligence in their systems, which will help them, right, analyze this data more effectively, right? And the other challenge is changing AML legislation and industry. Yes. So AML legislation is not something which is very much constant. It constantly changes. It's a very dynamic thing, right? So the rules and regulations will change from time to time, right? So it is very important for the banks, to observe these changes and implement these changes in their AML due diligence procedures, right, to keep in line with the industry. Right? And finally, the most important is your training and education, right? Employee training and education is considered very important, right? So the banks, the financial institutions would invest and they should do enough to train their employees and keep them updated in line with the AML regulations and the industry, so that the compliance officers would be doing the best of their job. So that is something about your source of fund and source of wealth. So this is a very important concept and very important for the banks, especially, right, when they are doing this due diligence on their customers, be it an existing customer or be it an onboarding, when they are onboarding a new customer. This analysis will simply tell the bank. So if the bank can effectively do this analysis, it will help the banks to clearly identify if the customer is involved in financial crime or not, right? So this is a very important analysis, and when it comes to from the interview standpoint, yes, you may get this question, right? So basically they may ask you, tell me about source of fund. So you can clearly explain what is source of fund, what are the verification methodologies, using examples. At the same time, they may ask you what is source of wealth, right? Or they may ask you what is the difference between source of fund and source of wealth. So from this concept, you have three questions. So what is source of fund, what is source of wealth, and what is the difference between source of fund and source of wealth.